Good morning, everyone. Once again, this is Black Forex coming to you this morning with another pre-market breakdown video. This one we're looking at the British pound USD. But before we get started with breaking this down, we have to state that this video is for educational purposes only. This is not financial advice, but the goal of going on a forum or a website like YouTube is to try to find the best financial education as possible. Let's see if we can provide that for you so we can help improve one's finances, help improve you guys' finances. Okay, so we're looking at the British pound USD. Pretty much, yeah, we were pretty much going up for the most part. And now we're kind of ranging out. So we're at a point where we went up and we're ranging out and we broke all these previous market structures that were here before, and now we're ranging out. So now we're kind of ranging out because we're battling out, we're battling out, we're battling out. Because every time everybody remembers when price was up here, the pressing sell, 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 sell. But that's what happens when you just trade purely off of technical analysis and not understanding the fundamentals. As I stated in previous videos, the USD is weak due to inflation. So, in order for a sell to kick in, USD must become strong enough to push the British pound all the way down. Now, from a fundamental standpoint, the GPB is not one of the strongest currencies heading into this week. It's actually one of the weaker ones. But even though it's weak, even though it's weaker than the other currencies, it's still stronger than the USD. So, from a technical analysis standpoint, if we were looking to continue with the current trend that we're on, which would be an uptrend if that were to happen, what we would look for is a break in our market structure range. Okay. So, what we would want to see is aggressive moves up with a pathetic attempt to come down and then a very another aggressive move up. Once we see that, we can pretty much now, if you want to be safe, there's going to be a little range that comes after that. Now, if you want to wait for that little range, that's completely okay to get back in. But once you got the aggressive move up, the pathetic attempt to go back down, and then the move up again, then it's pretty much kind of go time for the buy. Okay. Same thing. Let's say for some reason the USD has some unexpected news about the U.S. economy improving because the government decided to get off its behind and start to actually intervene in this matter. Then what you would see is that the strength of USD would pick up, which will force this to go down. So what you will see is it'll probably go up to around this range it's been at before, but the move down would be very aggressive to either probably come all the way down to this borderline of this market structure or actually break this market structure with just a few red candles, probably about three or four of them. If you was to see something like that, then you can pretty much say that the sellers are back in control. So once you got your aggressive, once you got your weak, pathetic move up to get back into this area here, then you have your very aggressive move down. You can wait for the other pathetic weak to go up, pathetic weak attempt to go up before it continues to go back down. But once you got that move right back, aggressive move down, and you got that slight range, it's pretty much go for the sale too. So when you're placing a trade, you never want to be so emotionally handcuffed to one position. Like, okay, I'm here for a buy, I'm here for a sale. You want to understand the market behavior. If it does this, I'm going to buy. If it does that, I'm going to sell. Okay. I hope that information was helpful for you guys. Happy trading.